The EURUSD pair surged above 1.17 after the release of the July FOMC meeting minutes. The market is pricing in a strong possibility of a rate cut by the Federal Reserve in September. In this video, we will analyze the minutes for clues on the future policy actions by the Fed and how it will impact the euro against the dollar. The Federal Open Market Committee, FOMC, meeting minutes from July, reveal that most participants judged that a further 25 basis point increase in the target range would be appropriate in the next meeting. However, a few members were of the view that it might be appropriate to hold the target range steady in the upcoming meeting. Participants generally noted that a significant slowing in the pace of price increases had become evident in recent months. In my previous video, I explained that the market was pricing in a 93% probability of a 25 basis point rate hike in September and only a 7% chance of a 50 basis point rate hike. Today, the market is pricing in a 67% probability of a 25 basis point rate cut in September and only a 33% chance of a 25 basis point rate hike. In other words, the market is now pricing in a greater possibility of a Fed rate cut in September than a Fed rate hike in September. This is a huge shift in market expectations that is causing the euro to surge above 1.17. What did the Fed officials say about the economy? The economic projections released by the Fed officials in June showed that they were expecting a 5.1% GDP growth rate for 2023. But in today's minutes, that was downgraded to 2.1%. As I have been pointing out in my previous videos, the soft landing scenario is becoming increasingly unlikely as each month that passes without a recession. A soft landing followed by a period of economic stagnation is now the more likely scenario, in my opinion. What does this mean for the euro against the dollar? As I explained in my video on July 27th, when the Fed signals a pivot from fighting inflation to supporting the economy, the US dollar tends to weaken. The reason is that investors switch from holding dollars to investing in riskier assets, such as stocks. If the Fed cuts rates in September, it will be a clear signal that the central bank is prioritizing economic growth over inflation. This could cause the euro to strengthen against the dollar in the short term. However, if the Fed maintains a hawkish tone in its communications and signals that further rate hikes are possible if inflation does not subside, the euro could lose momentum and head lower. The market will be closely watching the Fed's next policy meeting in September for clues on whether the central bank will cut rates in the near future. If you want to learn more about the FOMC meeting, I will leave a link to the full transcript of the meeting, minutes in the description below. If you enjoyed this video, please hit the like button and subscribe to our channel for more weekly content. Thank you for watching, and I will see you in the next video.